Pure, good to see you. How you doing? Evening, how you been? Pablo, good to see you. How you doing? Evening, how you doing? Good to see you. Okay. JP, good to see you. How you doing, brother? How you been? Evening. Good evening, Miles and all CMF. Let's go, JP. How you doing, brother? How you been? Stormy, hi, Miles and CMF. Good to see you. Stormy, how you doing? How you been? Mike, good day, Miles. Good to see you, brother. How you doing? Hi, Miles. Hope you're okay. Johnny, good to see you. How you doing, Johnny? How you been? Hey, Miles. Hope you're doing well. I'm doing great. Khaled, good to see you. How you doing? How you been? A lot of things have happened today, mainly between the US and China. A lot of things have happened. In terms of also regulations, a few things have happened inside of New York, which we're going to hear from tonight's live as well. But it seems like China is not backing down in any sort of a way, and they think to themselves that they can win during this tariff battle. Every other country is pretty much backed down. And there are news coming out that apparently China is willing to step out of the United States market space, but also that the US is willing to kick out China from the stock exchange as well. Can you explain what's going on in crypto? I'm worried it won't reach highs. Johnny, don't worry about it. The crypto market space is going to reach highs no matter what, mainly because the more the traditional market space essentially gets quite volatile, an alternative market space like crypto should essentially prevail and do a lot more better. And it's not just, perspective that I may share, but it's also a perspective from a few CEOs and co-founders of major crypto essentially platforms. And, based on their own data, essentially, is what they're estimating that the crypto market space should do a lot more better during these volatile stages of tariffs between the United States and China. But it seems like China is genuinely going head to head. They don't want to back down in any sort of a way. Every other country is pretty much backed down. Another quiet day in the neighborhood. Lol. Let's go, JP. If only I had cash to buy at the moment, get bonus from work at the end of the month. Hope there's still essentially some bargains to be had by then. I think there will be, without a doubt, because the whole situation with China, they're not backing down in any sort of a way. And the reason why the crypto markets today essentially didn't do some sort of positive reactions, of a continuous positive reaction, is mainly because the talks that are happening, essentially China is willing to leave the US market space. The US is willing to kick out China from the US market space. Neither one is backing down in any sort of a way. But a lot of things to discuss in tonight's live. So welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. I'm hosting live that you're watching right now. You can tune to this live Monday to Friday, 11:25 p.m. UK time onwards. And this is episode 297 of the CMF Live that you're watching right now, which is an incredible one, episode 297. In this live, I talk about the most recent news happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Any statements you might want to make towards the crypto space or legislations, or essentially if you have a question. In tonight's live, we're going to talk about essentially the Chinese and the US market space. We're going to talk about how it impacts the regular market space and essentially the crypto market space. We're going to talk about regulations on tonight's live as well, because New York is really pushing for regulations right now. We're going to talk about some perspective news from Vanik and essentially other key players, executive board members and CEOs and CFOs. We're going to talk about the SEC on tonight's live. We're going to talk about Ripple on tonight's live. Quite a mixture of news to go from tonight's live, to be fairly honest. And also some Bitcoin news, or essentially cryptocurrency stockpile news as well, coming out from the United States as well. Now, before we go through any of those news topics, let's go quickly inside the comment section first, and then we go straight into the first news, which is regarding some of the rumors that's coming out of regarding the China and US situation. The rumors are coming out of Fox, essentially news. They're the ones that are releasing it. But before we go through that, let's go inside the comment section first. Hi, Miles. I hope you're well tonight, mate. And hello to everyone inside the CMF. And Adi, good to see you. How you doing? How you been? Good evening, Miles. The CMF, free and forever. Good to see you. How you doing? How you been? Good evening, Miles. How are you? I'm doing great, Kelly. Good to see you. How you doing? How you been? Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing? How you been? Evening, Miles. Lee, good to see you. So how you doing? How you been? Evening. By the way, thank you so much to everybody from the CMF who has liked this live on X. I'm getting notifications right now. Thanks so much to everyone from the CMF who has liked this live on X, who's retweeted this live on X, who's put a comment outside the live, essentially on X, hashtag the XRPLME, hashtag Trump, hashtag MAGA. And thanks so much to everyone who essentially who's liked this live watching on YouTube also from the CMF. Evening, Miles and family. Ian, good to see you. So how you doing? How you been? If you haven't done that, CMF members, just take 5 seconds to like and retweet this live if you're watching this on X. If you're watching on YouTube, just take 5 seconds to like the live. Dennis, hi Miles and CMF, good to see you all. Dennis, how you doing? How you been? Now, let's go through the first news on tonight's live, which is regarding the rumors that are coming out of what's happening between China and the United States. So there are rumors essentially spreading about the next big US move in the US versus China trade war that's going on right now. So here is some leaked information that Fox News has released. According to Fox News correspondent Charles, the Trump administration is preparing to take steps towards the possible delisting of Chinese public companies from the US stock exchange. According to sources, also the new SEC essentially chairman, Paul Atkins, who is essentially expected to take office, will make this issue a major priority, his agenda after essentially officially taking office. While the possibility of delisting is being evaluated for the Chinese market space from the US market space, in the shadow of the ongoing trade war with China, it is stated that there is an increasing appetite in the Republican Party's congressional wing to remove Chinese companies from US market spaces. US law essentially allows Chinese companies to be delisted from stock exchanges if they fail to open their financial records to inspection and disclose their essentially ties to the Chinese government in a transparent manner. One issue that has essentially particularly caught the attention of lawmakers is the so-called golden shares, which gives the Chinese government direct control over publicly traded companies in the US market space. These shares have been criticized for increasing the influence of Chinese states in the management of companies. So the US does have the right to kick out, within the US law, the US does have the right to kick out Chinese companies only if they don't open up their books to the US government, so that the US government can see if there are essentially some ties between the Chinese government and these Chinese companies in the US. This is going to cause a massive ripple effect for China if this does happen. This is pretty much the beginnings of the US sanctioning China in some sort of a way and damaging their economy even further. There's actually been videos that were released from Chinese employees in Chinese factories, which essentially were emptied out. And that's essentially those employees said that this is worse than the COVID pandemic situation for them in terms of work-wise. From Chinese employees, the video was released essentially from them themselves. So China is definitely taking a massive blow towards this whole tariff battle that's going on, even though the Chinese government may show that they are resilient and they can go head-to-head with Trump, they can go head-to-head with the United States. However, the numbers suggest otherwise, where China's economy is not doing too well. China's yuan is actually free-falling compared to the US dollar. And Chinese employees are not happy in any sort of a way because a lot of them have lost their jobs and their factories are getting emptied out. And now that the US's next step is going to be to kick out Chinese companies from the US stock market, that's going to cause a massive ripple effect. That's going to put pressure on the Chinese government because all those Chinese CEOs and CFOs and executive board members are going to get very, head to head with the Chinese government and tell them to slow down because now they're damaging their businesses also. So that's going to put a lot of pressure on the Chinese government. But also news is coming out from China's perspective. So that was US's perspective. But news is also coming out from the Chinese perspective that they are willing to remove their companies worldwide if it gets to that stage, where China is willing to remove all their companies worldwide. That might be the most dumbest idea Chinese governments have ever thought about to do, essentially be doing, if it turns out to be true. Because that's the rumor that's coming out of China, that China is not going to back down and they're going to remove all their companies worldwide. And on the other side is the US rumor, which is the US is going to be kicking out China from their market spaces, but then China is willingly going to remove themselves from every market space around the world. If China does that, they're automatically going to essentially go to a free fall if they do that. So that means that the Chinese government, if they do that, and it turns out to be true, the Chinese government is willing to crash their own economy on purpose just so they don't have to kneel to Donald Trump, is what it looks like. And some people might say, well, China won't do that, or China wouldn't do this, and so on and so on, because it does sound ridiculous to essentially even be for it to be true. But when people are angry, sometimes they are human and they make mistakes. And especially with the comment that essentially JD Vance made regarding the Chinese peasant situation, where JD Vance said that essentially we borrow money from Chinese peasants and then use that money to buy products from Chinese peasants. And that didn't really go down well with Beijing. Beijing was very angry on that matter, that why did JD Vance suggest that Chinese are peasants and that they're borrowing money from peasants to buy more products from peasants. So the Chinese government was not happy about that comment. They're actually just seeing this as like, adding fuel to the fire, pretty much, you could even say, in the simplest way. But it seems like China's not willing to back down. Now, the thing is, as I said previously, the chances of China winning this tariff battle are zero compared to the US. If China was doing the tariff battle with the EU, sure, they would, essentially last longer. If China was doing a tariff battle with any other market space around the world, they could pretty much go head-to-head as much as they want. And, they might have a chance of winning. But China going head-to-head with the US market space, there's zero chance of winning. Because every other country is lining up to do contracts and deals with the US. And essentially, I think the Chinese market space were betting on the idea that countries would line up behind China. So I'm presuming that China thought if they go head-to-head with Trump and the United States, there will be countries that will essentially decide to go with China instead of the US. But it turns out no countries lining up to do a contract with China. If they had the option, they're all going to choose the US, which they have done, to be fairly honest. I mean, there's even BRICS nations that are backstabbing China and trying to take China's position of what they used to sell to the United States. I mean, Brazil wants to provide agriculture to the United States, which China used to provide a lot to. Or essentially Egypt and Morocco want to provide clothing, which China essentially provide that to the United States as well. So even South Africa, a lot of countries are lining up to take China's positions. And I don't think the Chinese government thought that would happen, that the world would choose the United States, that the world would choose Donald Trump. But it seems like the world has chosen Donald Trump. Every country is pretty much lining up to do a contract with Donald Trump. Nobody's lining up to do contracts with China. Sure, they'll do side contracts with China, but their main contract is with Donald Trump. And I don't think China thought that would happen. I thought China probably thought to themselves, people are going to choose China instead of Donald Trump. But it seems like, no one's doing that. Everyone's signing up with Donald Trump. It's the biggest market space on the planet. And that people are starting maybe to realize that the grass isn't greener on the other side. Also, everybody remember the whole TikTok situation where, essentially where TikTok is supposed to get banned inside the United States if they don't sell it to the United States company or so on, because the US is scared about the data situation when it comes to TikTok. The founder of TikTok went into essentially the House of Congress, and he did an interview where the US government was asking him, "Are you Chinese?" And he kept on saying, "I'm Singaporean." If anybody remembers that, if anybody remembers the whole TikTok situation with the US government where it's supposed to get banned, the founder of TikTok came into the essential house of the Senate, and he was asked questions of, "Are you Chinese?" And he kept on saying, "I'm Singaporean." It was a big meme about it. And every question they kept on asking, "Do you have a Chinese passport? Do you work with a Chinese company?" And he kept on saying, "I'm Singaporean, I'm Singaporean." Well, you fast forward to today, where it turns out China has actually stopped the deal happening with TikTok, even though they claimed TikTok is a Singaporean company. They claimed for the longest time TikTok is a Singaporean company. It's based out in Singapore. It's got nothing to do with the Chinese government, and so on, was the argument back then. Now it turns out that because of the tariff battle between the United States and China, Beijing has stopped the deal of TikTok happening, which is odd because TikTok was Singaporean. All of a sudden, TikTok is now Chinese, because it was Chinese from day one, but they pretended to be Singaporean. They pretended to be a Singaporean company. Because otherwise, how did Beijing get the rights to stop a TikTok deal happening if TikTok is not Chinese? A lot of things are coming out now of how things really are. But essentially, Beijing, because the TikTok deal was supposed to be happening 3 days ago or a week ago. But apparently, Beijing stepped in and said, "No, we're not going to sell TikTok to American companies." TikTok was supposed to be Singaporean. What's it going to do with China? Why does Beijing get the right to stop that deal from happening? Because TikTok wasn't Singaporean, it was actually China. It was owned by China. American data was essentially being handled by Chinese data servers. And a lot of people might argue and say, well, that's not important. Who cares if China has my data? Well, data is very important, especially going into a digital world. And you would rather have your own data where you get to handle your data, or your own jurisdiction has your data, rather than a foreign country that could use your data against you somewhere down the road, depending on how they use it against you. But yeah, that also got stopped, the whole TikTok deal. Turns out TikTok is actually Chinese because Beijing stopped that deal from happening. Now, what we're going to move on to next is New Hampshire. But that is essentially why the market space has come to a halt. Not because of the TikTok deal. I just added that one in as a bonus news for everyone. But essentially, the crypto market is a little bit saddened because of the head-to-head situation still with Trump and China, where the US is going to pull Chinese stocks out of the stock market, and China is willing to, apparently, rumors suggesting that they're willing to remove themselves from the world market if they have to, just to go head-to-head with Trump. But that is what essentially impacting us slightly. There's some other factors in play of why the crypto market is, not jolly today either. But some other factors in play. But now moving on to New Hampshire. New Hampshire takes a historic leap. Bitcoin Reserve Bill, or crypto stockpile, has just cleared the House Committee. So New Hampshire's House Commerce and Consumer Affairs Committee has overwhelmingly approved a bill that could pave the way for the state to invest into Bitcoin or crypto assets in general. The Bitcoin Essential Reserve Bill, they're calling it, which passed with a full resounding 16-1 vote, which is pretty much flying colors, now heads to a full House vote, making it a crucial step in integrating digital assets into a state financial reserve inside the United States. Introduced by Republican representatives Keith and co-sponsored essentially by Democratic Chris and essentially Kerry, the House Bill 302 proposes allowing the state of New Hampshire Treasury essentially to allocate up to 5% of the general fund revenue stabilization fund or other essentially authorized state funds into Bitcoin and precious metals like gold, silver, and platinum. Initially, the bill suggested a 10% allocation, but it was essentially amended to a 5% allocation because of the volatile stage the market space is in. The legislation specifies that only digital assets with an average market capitalization of at least $500 billion over the past year are eligible for this essential allocation of funds, and making essentially Bitcoin technically the sole cryptocurrency that can currently meet these criteria. If any other crypto asset gets to $500 billion in market capitalization, then they can also be a part of this fund. Any acquired digital assets must be securely held by essentially qualified custodians or in a form of an exchange-traded product, an ETP essentially. New Hampshire joins a growing list of states in America, including North Carolina, Oklahoma, and Texas, that are essentially exploring the integration of cryptocurrencies into their financial strategies. This move essentially aligns with the broader national discussions on cryptocurrency adoption and regulations as the United States continues to navigate the evolving landscapes of digital assets. If the bill passes the House, the essentially full House vote, it will proceed to further committee reviews before reaching the Senate for a final decision. This development underscores New Hampshire's proactive stance on cryptocurrency adoptions and could set essentially a precedent for other states to follow in suit. There's a lot of American states right now that have applied for some sort of crypto stockpile or a Bitcoin reserve. And they are getting to stages where we could pretty much say like a domino effect is going to be happening in American states where they all get, back to back, essentially green lighted for some sort of crypto stockpile or a Bitcoin reserve. It is going to be happening. I mean, they're all passing with flying colors. And this recent vote from New Hampshire to add essentially cryptocurrencies to the allocation of their funds, or 5% allocation towards their funds for New Hampshire, passed with flying colors, 16-1 vote. Only one person rejected it. Everybody else approved it. Now, moving on, essentially from New Hampshire's news regarding this leap that's happened in New Hampshire to Grayscale. Before we talk about Grayscale, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first. And then the next news we're going to talk about is regarding Grayscale. And it's to do with the tariffs, essentially, situation that's going on right now. So let's go inside the comment section first. See where we're at. We were at here. Hi, Miles of CMF. Dennis, good to see you. How you doing? How you been? Joe says, evening, Miles of CMF. Joe, good to see you. How you doing? How you been? Comatose, hello, Miles of CMF. Good to see you. Comatose, how you doing? How you been? JP, let's go. Mickey, evening, Miles and CMF. Good to see you, brother. How you doing, Mickey? How you been? Evening, Miles of CMF. Pius, good to see you. How you doing? How you been? Hi from Malaysia. Shakira, good to see you. How you doing? How you been? So, Grayscale. Grayscale, managing billions of dollars, said tariffs will soon benefit Bitcoin or crypto assets in general. So recently I shared some perspectives on this live 2 nights ago, where essentially a few CEOs and essentially CIOs of major crypto exchanges like Binance, Bitwise, Bybit, and so on, where they all shared similar perspectives. And they said the longer this tariff battle essentially between China and the US keeps on going head to head, the more pressure it's going to put on the Chinese market space in terms of investors, and they're going to jump out of their traditional Chinese stocks and head towards alternative market spaces, which would essentially in that sense be the crypto market space. Grayscale has came out with the same perspective, you could say, pretty much. So here it is. Market uncertainty is rising as US President Donald Trump signals he could return to aggressive tariff policies. While these developments have contributed to a short-term weakness in Bitcoin's price, a new report from crypto asset manager Grayscale suggests that the longer-term impact could be very bullish for crypto assets. In the report, Grayscale notes how increasing tariffs and essentially protectionist policies could push the US economy into a stagflation, a period marked essentially by raising inflation in terms of the economic growth. Historically, stagflation has essentially been negative for traditional assets like stocks and bonds, but very beneficial, essentially beneficially for scarce commodities. Bitcoin is too young to know how it will behave in historical periods, said Grayscale. The report said, adding, but historical data suggests that stagflation essentially tends to be negative for traditional assets in returns and positive for rare commodities like gold. To support this claim, the report from Grayscale cites a 1970s period of intense stagflation when gold appreciated at an annual rate of around 30% and was significantly essentially higher than inflation. Grayscale suggests that Bitcoin or crypto assets in general, Bitcoin is often referred to as digital gold, could behave similarly under similar economic conditions. Beyond inflation concerns, the report also looks at the geopolitical implications of Trump's tariff agenda, which essentially it says could have undermined global trust in the US dollar and dollar-centric financial systems. If trade tensions lead to weakened ties in the US economy or all essentially US dollar-centric financial markets, countries may accelerate diversification of their foreign exchange reserves, Grayscale said. Such as a shift could encourage greater adoption of decentralized assets, for example, like Bitcoin, as a part of this diversification strategy. So, Grayscale is pretty much sharing the exact same perspective. That's their newest report. They're sharing the exact same perspective that essentially Bitwise, essentially CIO had, or essentially Richard Teng had from Binance CEO, or essentially Bybit's co-founders had, which is the more this tariff battle situation continues, the more essentially China and America keep on headbutting each other in terms of tariff battles and tariff wars and so on. It's actually going to be a positive for the crypto market space, because the more uncertainty that is created, the more investors are going to jump out of traditional assets and go towards alternative assets, which could be the crypto market space, in their words. This is pretty much like the fourth or fifth essential perspective that came out from a major player, that the crypto market space is where to be in a situation like this, and that Trump's policies are actually pushing countries towards crypto assets, which is beneficial for crypto. Now, the US CPI data came out, but the market didn't react positively. So the US CPI data impact surge in Bitcoin post-rate cut essentially bets. Bitcoin surged over 82,000 after the release of the CPI data, raising market anticipation of a Federal Reserve rate cut. US short-term interest rate futures responded sharply, reflecting these expectations. US short-term interest rate futures rose essentially today following the release of the US CPI data, prompting essentially increased bets on a Federal Reserve rate cut to be happening. Now, the Fed does have to do rate cuts, especially with the whole tariff situation going on. That has put pressure on Jerome Powell to do rate cuts. In the wake of this financial shift, Bitcoin surged over $82,000. The surge in interest rates futures underscores market expectations of monetary policy changes, and historically, essentially, such anticipations have influenced financial market trends, affecting both traditional and digital assets. Bitcoin's price increase was a notable outcome of these developments, driven by speculation of easing monetary policies. US CPI data release acted as a catalyst, influencing traders' expectations for Federal Reserve actions, and the traders speculate on a potential rate cut, leading to a surge in short-term interest rate futures. Such essentially prospects reflect a broader economic sentiment, signaling essentially a possible shift in policy directions by the Federal Reserve. The US short-term interest rate futures rose following CPI data release, reflecting expectations of easing monetary policies. Market reactions were immediate, with Bitcoin rising significantly. Major financial essential institutions and traders responded to the CPI data, reflecting essentially an interconnectedness of economic indicators and cryptocurrency markets. Despite widespread interest, official statements from leading financial figures remained scarce. So, why didn't Bitcoin or the crypto asset market space stay relatively up? They reacted positively to the CPI data that came out today, but then they didn't stay high. They essentially, the majority of crypto assets went down 4 to 5% instead of staying positive after the CPI data. It's because China and the US are still going head to head in tariffs, and that is causing market uncertainty. The 90-day pause announcement made the market react in a positive way because it's big news. Pretty much it means every country has came to the table. The issue is one country hasn't, and that country is the second biggest market space in the world. So because those two countries, the US and China, are still going head to head, that essentially caused some scariness or volatility stages at a market space, you could say. And that's why after the CPI data came out and the market did react positively, it didn't stay relatively up. It came back down. And the market's been down 4 to 5, 3%, 2%, depending on what assets you're looking at. Now, US House approves plan for Trump's tax cuts is what we'll talk about next. And also just to point out, any positive news that comes out now and the market doesn't react in a positive way because of the whole tariff battle between Trump and China, later on, when this whole tariff situation ends, the market will show the reactions it wasn't able to do under this whole head-butting tariff situation. US House approves plan for Trump's tax cuts is what we're going to talk about next. Potential impacts on cryptocurrency market spaces. The US House of Representatives has approved a plan to advance former President Trump's tax cuts while simultaneously raising the federal debt ceiling. This decision could essentially cause ripple effects in both traditional and cryptocurrency markets due to possible macroeconomic shifts. The House of Representatives recently sanctioned a pivotal plan focusing on Trump's previous tax reforms, valued at $1.5 trillion. This action is set against the backdrop of the burgeoning national debt as the ceiling escalates by $5 trillion. The House Speaker Mike Johnson linked this move to a fiscal reforms previously set in motion, stating the budget will come up for a vote probably tomorrow. So we're going to get some sort of a vote coming out tomorrow from the United States in terms of tax cuts. The decision has prompted various responses. Some legislators have shown support, emphasizing the potential for economic simulation, while others contest the associated fiscal risk. Internal disagreements over balancing spending cuts and tax reliefs are noticeable within the party, possibly influencing future debates. Markets and political essentially analysts are observant, with many speculating on a broader economic impacts. House Speaker Mike Johnson noted financial benefits, whereas Texas conservative Chip Roy voiced distrust in Washington's ability to contrast regarding their spendings. In 2017, a similar tax cut reform introduced by Trump led to a temporary GDP increase but expanded deficit, promoting essentially alternative investment among wary essentially tax-paying individuals, boosting Bitcoin interest during that period. So the first time essentially Trump introduced back in 2017 regarding tax cuts and so on, it was actually played out very positively for the crypto space. If that same scenario plays out again, the market space should be reacting in a positive manner. If the crypto market space doesn't react in a positive manner because of the news of tax cuts, it's still because of the whole tariff situation that China and the US are going head to head. That China should be backing down, in my point of view, because they are on the losing side. But the Chinese government is, you could say, angry at America for not respecting their market space, for not respecting their people, and probably because J.D. Vance said they're peasants. But nonetheless, Trump is, essentially the winning side compared to China, in my point of view, without a doubt. Now, moving on, essentially from the tax cut break that could essentially come inside the market space, and the market space should be reacting in a positive way. We're going to get that announcement essentially tomorrow. Is there a tax cut or not? New York is what we're going to talk about next, but specifically regarding regulations. Apparently, New York is fed up that the US government is still discussing regulations but not passing any regulations for the crypto market space. And apparently that New York wants to move faster in terms of crypto regulations. So here it is. A New York Attorney General urges Congress to pass crypto regulations. They're tired of Congress and senators just keep on discussing regulations, and they want regulations passed instead of just back and forward discussions. New York Attorney General James has essentially urged lawmakers in the United States to pass federal legislations on cryptocurrencies. In her letter, that came out today, Attorney General James warned that the lack of robust federal regulatory frameworks for essentially crypto raises the risk of fraud, crypto-related crime, and financial instability. A strong legal framework would help mitigate against essentially these potential risks, as well as allow for better protections for investors. James said she addressed the letter to the Senate Major Leader John, Senate Minority Leader Charles, U.S. House Speaker Mike Johnson, and House Minority Leader Jeffries. She essentially revealed to the New York as the countless cryptocurrency and digital asset investors that the lawmakers have to do more than to protect investors and their money. Thousands of investors in New York and across the country have lost millions of dollars to cryptocurrency scams and fraud that could have been prevented with stronger federal regulations. She said, I am urging Congress to pass legislations that would strengthen federal regulations on cryptocurrency industries to protect essentially investors, strengthen financial markets, and stop fraud, she said in a statement. James said that the lawmakers should require crypto companies to register with the federal regulatory agencies and set minimum listing standards for crypto tokens. James' letter to congressional leaders comes just days after the Department of Justice announced it was dismantling, which turns out to be 50-50, its crypto fraud investigation unit. It also comes essentially on the back of the notable progress in Washington's regarding stablecoin regulations, with lawmakers in the Senate and House of Representatives passing key bills on stablecoins. According to James, a federal legislative framework should force stablecoin issuers to have presence inside the United States. The issuer, she essentially argues, should deposit their stablecoin reserves in the US Treasury and other cash equivalents in local banks in the country. And this is where the situation happens. In local banks in the country, top stablecoins pegged to the US dollar include Tether and Circle's USDC. Does that section sound very familiar? Where essentially she stated, the attorney from New York, she stated that if a stablecoin issuer wants to operate in the United States, they should essentially be keeping their reserves in US treasuries and other cash equivalents. Fair enough, which they already do in terms of stablecoins. They should be doing. But she also went on to say that in local banks in the country, you see, the EU has the exact same rule for stablecoins. And one particular stablecoin didn't pass that, which was USDT, where the EU said if you want to operate in the EU, you would have to hold some sort of reserves inside EU banks, which then USDT Tether, or Tether CEO, you could say, rejected. Tether CEO said they don't want to hold any of their reserves in EU banks because they don't trust banks, is what Tether CEO said. That they don't trust banks and they don't want to hold any of their reserves in EU banks, which some people might say, yeah, we stand with Tether, we don't trust banks and so on. But then if you look at it from the EU's perspective, they're looking at it as if Tether's stablecoin, USDT, depegs once, just once, it could crush and damage the EU economy. However, if Tether is holding some sort of assets in EU banks, and God forbid, decades from now, Tether's stablecoin USDT depegs, at least Tether is holding some sort of reserves in EU banks. Therefore, the EU can essentially, help themselves to those reserves to not let their economy crash, because EU businesses, or the majority of EU businesses, are doing payments in USDT. So that's EU's perspective of why they kicked out Tether, because Tether didn't want to hold any of their assets in EU banks, which then the EU said, well, if you don't want to hold any of your assets in our banks because you don't trust our banks, you can't operate in our country, full stop. And Tether said, well, that's absurd. Banks are essentially outdated. Nobody trusts banks. I don't trust banks, and so on. And then he just went on this whole big Babylon. But what I'm trying to say is that the US is looking into the same thing. And I did say, whatever happens in terms of G20 countries, they should all be on the same sets of rules and regulations, because that's what they said in the G20 summit in New Delhi last year. In the G20 summit, essentially the previous G20 summit in New Delhi, all G20 countries came together and signed the same agreement to be under the same sets of rules and regulations when it comes to the crypto space. They said we should be treating the crypto space between G20 countries like we treat planes in the sky, where every plane essentially has, a plane operating in the sky has the same rules and regulations for every jurisdiction that it flies over, and that the crypto space should have similarity in rules and regulations between G20 countries. Sure, you can have some differences between jurisdiction, but the majority of rules and regulations should be the same. And I said, if the EU has put certain law like that, where a stable coin has to hold certain assets in their banks of their jurisdictions, then it could also mean that the US might be on the same path. And if the US does implement what essentially has been said by this Attorney General from New York in her letter to essentially a list of governmental people that are, essentially going back and forth on stablecoin legislations, if they state that you have to hold some of your assets in essentially US banks, would Tether object again? Probably. But if Tether does object, it raises millions of questions of why is Tether objecting to the idea of showing you reserves? And is Tether going to use the same argument? They don't trust banks. And they could just say, well, we don't trust your stablecoin. It could depeg. We have had stablecoins depeg before. The stablecoin that essentially was attached to Luna depegged and damaged the crypto market space quite a lot, actually. A lot of people lost millions of dollars. And a lot of people lost their lives towards the market space with Luna. So, we've experienced depegging situations inside the market space, and it didn't go well. And then we had the USDC depegging situation as well. That didn't go well either. So I fully understand where Europe is coming from, where, you're going to hold some assets in our banks just in case you depeg. We don't know if you're going to depeg or not. And if the US goes with the same regulation, that will definitely slow down USDT's essentially expanding into the market spaces if they reject the US market space under the same regulation. But also, the US was thinking of another law as well in terms of stablecoin regulations. And that second law the US is thinking of implementing is that if a US stablecoin is not allowed to operate in the United States, then that same US stablecoin is not allowed to operate anywhere else in the world, because American citizens might buy that stablecoin from a different jurisdiction, and they can be impacted if anything ever happens to that stablecoin in terms of depegging or any other scenario. So if a US stablecoin, so if it's Euro stablecoin, Rube stablecoin, Yuan stablecoin, the US doesn't care. If it's a US stablecoin dollar, and it's not allowed to be essentially purchased in America, then it's not allowed to be purchased anywhere else. So essentially, they're going to be sanctioned stablecoins also. So let's see how things plan out in terms of USDT. Now, Coinbase is what we're going to talk about next. We know for a fact, JP just said, let's go. Let's go, JP. Greetings, Miles and CMF. My apologies, I'm late. Lena, no problem. Good to see you. Evening, Miles and family. Ray, good to see you. How you doing? How you been? Mav, good evening, Miles and CMF. Good to see you. How you doing? Manny says, good evening, Miles and CMF. Good to see you. Manny, how you doing? Welcome to CMF Live. Now, Coinbase. Coinbase takes legal action against the FDIC over document access. So the FDIC was part of Operation Choke Point 2.0. And that's essentially under Trump's administration, the FDIC is pro-crypto. However, beforehand, the FDIC was supposed to give some documentations to Coinbase under the Freedom Act. And they were giving documents. The courts said they have to give their documents over if there was an Operation Choke Point 2.0 and so on and so on. And that, the FDIC was handing out documents to, under the Freedom Act to Coinbase, but they stopped. The FDIC stopped sharing documents to Coinbase regarding Operation Choke Point 2.0, which is odd. So what Coinbase has suggested essentially to do is sue them, because they stopped sharing particular documents regarding Operation Choke Point 2.0, which I think is a good thing, because it essentially puts pressure on the FDIC to stay pro-crypto. So, Paul, Coinbase's chief legal officer, has criticized the FDIC for its restrictive practices in a lawsuit aiming to gain access to documents related to regulatory actions targeting crypto firms. Coinbase is essentially embroiled in a legal battle with the FDIC, pursuing transparency regarding alleged actions against crypto firms. Paul criticized the FDIC's handling of the FOIA essentially request, emphasizing the need for an open regulatory processes, and legal essentially arguments focus on the FDIC's potential withholding of documents linked to Operation Choke Point 2.0. This initiative allegedly pressures the banks on their services to crypto companies. The FDIC was a part of the Operation Choke Point 2.0, where essentially they told banks they're not allowed to operate crypto companies. That was under Biden's administration, and when Gary Gensler was the SEC chairman. Fast forward to essentially Trump's presidency, pro-crypto, pro-administration, capital of cryptocurrencies, United States, and so on. So why is the FDIC doing this now? The case has broader implications for crypto industry banking practices and regulatory transparency. Access to financial services for crypto entities may change, influencing market dynamics. Bitcoin and Ethereum prices remain stable amid these developments. Community stakeholders view the lawsuit as a pivotal for the future interactions between regulatory bodies and crypto industries, that there should be transparency between regulatory bodies and crypto companies. They should be. Outcomes may set essentially precedents for disclosure of practices and industry oversights and regulations. And these practices raise essentially critical concerns about transparency in a regulatory process, noted essentially Paul, emphasizing that the FDIC's lack of transparency in handling the requests caused by Operation Choke Point 2.0 practices. Historically, initiatives like Operation Choke Point 2.0 have affected bank relationships with targeted industries. Similar impacts could shape how crypto firms manage fiat essentially transactions, particularly regarding US banks. Future developments may include potential regulatory or policy shifts that enhance oversight in the crypto sector. Historical trends and essentially courtroom outcomes will guide expectations for transparent and accountable regulatory process in the industry. Essentially, Coinbase is trying to keep the FDIC accountable and trying to keep the FDIC transparent as they go along, which I think is a good thing. I stand by it 100%. I love the idea of Coinbase pressuring the FDIC to stay transparent, because the FDIC has been dodgy in the past. Although now they may essentially say that they are pro-crypto, that they're telling banks to start, finding a way of working with crypto companies and so on. But for them to stop sharing documents from Operation Choke Point 2.0 raises questions. So I like the idea that Coinbase is suing them, but I also like the idea that it's not really impacting the market space, but it is going to create transparency. Now, tokenized gold is what we're going to talk about next. Tokenized gold market space is actually skyrocketing because of tariffs. So tokenized gold nears $2 billion market cap, as tariffs fear essentially spark safe haven trade. Gold-backed crypto tokens outperformed most crypto sectors, including stablecoins, in market cap growth since January 20th, when Trump came into power. Essentially a CEX.io report has just came out and said the market capitalization of gold-backed tokens swelled to just under $2 billion on Wednesday, up 5.7% over the past 24 hours, according to CoinGecko's data. The rise coincides with the yellow metal essentially briefly touching a fresh all-time high above $3,170 an ounce. Alongside the price rally, gold tokens experienced a frenzy of activity and demand over the past week as well, fueled by essentially broader market turmoil. Weekly essentially tokenized gold trading volume surpassed $1 billion, the highest since the US banking turmoil of essentially March 2023, according essentially to a report by digital asset platform CEX.io. The two largest tokens, Paxos Gold, PAXG, and Tether Gold, XAUT, making up the bulk of the tokenized gold market. So they're essentially weekly trading volumes surging over 900% and 300% since January 20th. According to a report citing essentially from CoinGecko data, Paxos G has also experienced a continuous inflows totaling $63 million during this period. DeFi Llama's data shows that. The rally tracks the broader gains in physical gold, which essentially posted double-digit increases in 2025, amid geopolitical uncertainties and inflation concerns. However, even gold wasn't spared during the market-wide sell-off triggered by the US tariffs, with prices briefly dropping 6% before quickly recovering to record highs. Since Trump's inauguration, tokenized gold has been one of the crypto's top performing sectors, with its market cap up 21%, the report noted. By contrast, stablecoins gained a more modest 8% in market cap, while Bitcoin declined 19% and the total crypto market lost 26%. Tokenized gold is emerging as one of the key diversification strategies among crypto native users, alongside Bitcoin, wrote essentially Alexandra, the VP of product management at CEX.io. He said it provides a safer and more stable approach to portfolio management, enabling users to stay within the crypto ecosystem while benefiting from the value and stability essentially of underlying physical assets. At the same time, the broader real-world asset narrative helps make gold exposure more accessible and essentially intuitive for users who may not have considered it beforehand. So the gold market space is doing incredibly well for itself by the looks of it. The gold tokenization market space is doing incredibly well. As the tariff battle situation is going on still head-to-head with Trump and essentially China, the tokenized gold market space is doing a lot better for itself because the numbers do speak for themselves. Essentially, gold's tokenized market space is been up 21% since Trump came into power, since 20th of January until now. Gold tokenization market space is up 21%, whereas stablecoin essentially, stablecoins have gained a modest 8%. Bitcoin has declined 19%, and the entire crypto market space 26% have essentially minus 26%. So it seems like the gold market space tokenization is doing tremendously well for itself. And once again, actual gold is better than Bitcoin by the looks of it. What we're going to talk about next, moving on from the tokenization of gold market spaces to OKX exchange and Standard Chartered Bank. So a revolutionary step has been taken between OKX exchange and Standard Chartered Bank, unlocking crypto collateral for institutions. You see, the next clientele that's going to be entering the market space, as I said for the longest time, is going to be institutions. So once we're done with this whole tariff battle situation and the regulations once we're done with this whole tariff battle situation between China and the US, and things essentially have went on paper, contracts and agreements are made and signed and dotted and so on, we're going to move into crypto regulations. And regulations are happening as we speak behind the sidelines in the House of Senate and essentially in the White House, in the SEC, the CFTC. Every government department is discussing crypto regulations. Straight after tariffs, it's going to be regulations. And after regulations, it's going to be institutions coming inside the crypto space. And this is a perspective that has been shared by Grayscale. It's been a perspective that's been shared by essentially CZ, the former CEO of Binance, and a few other major players like Standard Chartered Bank themselves. Crypto.com has said the same thing. Kraken Exchange has said the same thing, and so on. And this is essentially what a lot of exchanges are lining up, and a lot of institutions are lining up for. Institutions are lining up for regulations. Crypto platforms are lining up essentially to provide that service once the floodgates open. In a groundbreaking move, bridging traditional finance and the world of digital assets, crypto exchange giants OKX has teamed up with banking heavyweight Standard Chartered Bank. Together, alongside asset management titans Brevin Howards and Franklin Templeton, they're embarking on essentially a pilot project that could redefine how institutional players utilize crypto and tokenized assets. This isn't just another simple partnership inside the crypto space. It's a bold step towards mainstream adoption, and it's happening right under the regulatory umbrella of Dubai's Virtual Asset Regulatory Authority, VARA. Imagine a world where institutional investors can leverage their cryptocurrency holdings and tokenize money market funds, MMFs, without essentially having to move them onto an exchange. That's essentially precisely what this innovative pilot aims to achieve. The core concept revolves around off-exchange collateral. But what does that essentially what does that mean? And why is it a game changer for the crypto space? Traditional collateral versus off-exchange collateral. In traditional finance, institutions often need to pledge assets as collateral to essentially secure loans or engage in trading activities. Typically, this collateral is held on exchange or with a central counterparty. Off-exchange collateral, as the name suggests, allows institutions to keep their assets in their own custody, significantly reducing counterparty risk. Enhance capital efficiency by using crypto collateral and tokenized MMFs off exchange. Institutions can unlock significant capital efficiency. Assets that were previously essentially sitting idle can now be actively used to secure positions and enhance trading strategies without the need for liquidation or transfer of an asset. Reduce counterparty risk. One of the biggest concerns in the crypto space is counterparty risk. The risk that other parties in this transaction might default keeping collateral off exchange, especially with a regulatory such a custodian like Standard Chartered Bank. Seamless integrations with traditional finance. This pilot is a testament to the increasing integration of crypto traditional financial systems by partnering with established players like Standard Chartered Bank, Franklin Templeton, and OKX Exchange. OKX Exchange is building bridges and fostering trust within institutional investment communities. These are big names, Franklin Templeton, Standard Chartered Bank. They're coming together for a big key play inside of the loan and borrowing department of the crypto space for institutional players. A critical component of this pilot is the involvement of Standard Chartered as the regulated custodian in this essentially three-team workout. In the often essentially unregulated world of crypto, having a very trusted and regulated custodian is paramount, especially for institutional crypto investments. Now, what does Standard Chartered bring to the table to this, massive thing that's going to be happening in Dubai on this basis? Regulatory compliance is what it brings. Standard Chartered Bank is a globally recognized bank with a strong regulatory framework, and their involvement essentially ensures that the pilot operates within established legal and compliance boundaries, providing essentially building trust and confidence. Institutional grade security. As custodians, Standard Chartered Bank will be responsible for securely holding the crypto collateral and tokenized MMFs off the exchange. They bring institutional grade security protocols and infrastructure, safeguarding assets against theft and unauthorized access. Bridging traditional and crypto worlds. Standard Chartered Bank's participation is a powerful signal to the traditional financial world. It demonstrates essentially that established banks are not only acknowledging the potential of crypto, but are actively participating in building the infrastructure for its institutional adoption. And Dubai's VARA framework, the fact that this pilot is launched under Dubai's VARA framework is also significant. VARA is known for its progressive and proactive approach to regulating virtual assets, providing a supportive environment for innovation while ensuring investor protections. The OKX Exchange, Standard Chartered Bank, Bervin Howard, and Franklin Templeton pilot for a off-exchange crypto collateral is more than just a news headline. It's a significant milestone in the evolution of finance where big key players are all coming together to introduce something for the crypto space, mainly towards the institutional sector, and to show that the crypto space is maturing. It represents a powerful essential movement of traditional and decentralized systems coming together, unlocking new possibilities for capital, efficiency, and risk management in institutional spaces. As this pilot progresses and potentially expands, it could pave the way for a wider adoption for crypto and tokenized assets by institutions, fundamentally reshaping the financial landscape. This is essentially the space to watch closely. The revolution is underway. So, key players, Franklin Templeton, Standard Chartered Bank, Bevan Howards, and OKX Exchange are coming together in terms of crypto, essentially borrowing and lending services and providing a new service in terms of off-exchange collateral, where if you go to borrow against a certain essentially platform, you don't keep essentially your assets in a third party. You keep your assets off exchange, which is more secure, more reliable, so on. But the off exchange would, in this sense, be Standard Chartered Bank, which, in your eyes or anybody else's eyes, that should send a signal of your assets are safe, rather than your assets being held by a random crypto exchange and you borrow against it, and that crypto exchange goes bankrupt. The chances of Standard Chartered Bank going bankrupt is slim pickings. But the chances of a crypto platform going bankrupt, you never know what can happen. But it's an interesting feature they're offering. But what the important factor is, it's three massive players coming together and OKX exchange. Franklin Templeton, Standard Chartered Bank, these two are not jokes. And together, they just show that the crypto space is maturing. That have taken essentially this moment to come together to build and provide something for institutions. It does show that the crypto space is maturing, which is what we want to see inside the crypto space. The more the crypto space seems like a mature market space, the more liquidity and capital is going to be headed towards the crypto market space. The more the crypto market space is seen as a joke, the less capital is going to be entering into it, or the capital that does flow into it flows right out of it. But if it's seen as a mature crypto space, if it's seen as a mature market space, then the capital flows into it and stays in it. And some capital might exit, but the majority will come back. Now, Senator Luminous is what we're going to talk about next. Senator Luminous is pushing for a bill to buy 1 million Bitcoin still. She pushed this bill or something similar to this bill when it was first announced that Trump would create some sort of a Bitcoin reserve at that Bitcoin rally before Trump became president. Since then until now, she hasn't given up on the idea of America purchasing in some sort of a way 1 million Bitcoins. So, in a move that's sending shockwaves through the crypto industry, US Senator Cynthia Luminous has called upon once again for a swift action on a bill to acquire 1 million Bitcoins for the United States. Knowing for her pro-crypto stance, Senator Luminous continues to make headlines as one of the essentially few voices in Washington actively advocating for the adoption of this one particular bill. Her statements say, let's pass the bill to buy 1 million Bitcoin. This isn't just political noise. It's a declaration that signals how the tides could be turning in favor of cryptocurrencies at a federal level. If this proposal gains traction, it could mark the largest government-level Bitcoin acquisition in history. This move may not only essentially legitimize Bitcoin further, but could also strengthen its position as a strict reserve asset. The suggestion to purchase such a large volume of Bitcoin has initiated excitement and speculation. Analysts are now weighing in the potential impact of both short-term price action and long-term essentially market structures. Buying 1 million Bitcoin would mean that the US could hold nearly 5% of Bitcoin's total maximum supply. This could trigger a supply shock, potentially driving prices higher due to reduced market availability. It also sets a precedent that if the United States takes this step, other nations may follow in suit, pushing Bitcoin into a new era of global legitimacy and adoption. That has essentially already happened in some sort of a way. When America announced that they're going to become the capital of cryptocurrencies, every jurisdiction around the world started looking towards the American market space and decided to essentially create their own some sort of legislations to compete with the American market space. Because if America wants to become the capital of cryptocurrencies, a lot of jurisdictions around the world now want to become the capital of cryptocurrencies. When America introduced ETFs to the world, a lot of countries decided to look into ETFs because America introduced it. When America decided to introduce essentially a crypto stockpile and a Bitcoin reserve, a lot of jurisdictions around the world started looking into introducing some sort of crypto stockpile or Bitcoin reserve. And it's just that because whatever America does, other countries will always follow in suit. So if they go towards this particular ideology of purchasing 1 million Bitcoins, then the rest of the nations will definitely follow in suit. Not every nation, because some nations might not be able to afford it due to their crippling economies, but the ones that can afford it will probably look into it and start going towards it. But is that going to happen is the number one question, as if, this bill, is it going to get passed? Is America really going to be purchasing 1 million individual Bitcoins? Is the biggest question here. This development could bring essentially a new wave of institutional confidence and influence and how financial policy interests with blockchain technologies moving forward. The issue with this is that if essentially America purchases 1 million Bitcoins, let's just say, for example, if America purchases 1 million Bitcoin. So this is what something that Bitcoin maxis might struggle to understand, because all they see is Bitcoin. You know, they breathe and sleep and eat Bitcoin. But what you need to understand, the most simplest way, is that the founder of Bitcoin has a very, very heavy wallet of a certain amount of Bitcoin, which is around 1.1, you could say, roughly. If America essentially purchases 1 million Bitcoins, and let's just say Bitcoin isn't produced in, isn't Bitcoin, let's just say Bitcoin isn't created by a CIA operation or an American entity, all the rumors that may suggest that it might be an American government organization that created Bitcoin. Let's just presume it wasn't, okay? Let's just presume Bitcoin was created in China, for example. Just for example, let's just presume Bitcoin was created by a Chinese government department, or by a Hong Kong government department, or by a Singaporean government department, and they're keeping it very hush-hush. If America buys 1 million Bitcoins, and the founder of Bitcoin decides to drop his assets on the market space, what do you think the impact is going to be on the American market space? It's going to send off shockwaves throughout the market space. It's going to send ripple effects throughout the market space, mainly because America is the biggest market space on the planet. And let's just say, you know, America buys 1 million Bitcoins over a three-year period, 5-year period, because they're not going to buy 1 million Bitcoins instantly. America's not going to buy 1 million Bitcoins instantly. The plan is they're going to buy Bitcoin for 5 years and eventually have 1 million Bitcoins. So let's say America keeps on buying, keeps on buying, keeps on buying. 5 years passes, America has 1 million Bitcoins. Let's say another 5 years passes and Bitcoin goes to higher price points because America's buying Bitcoins, everybody's buying Bitcoins within that 5-year period. If America announces they're buying Bitcoins, nations are going to look into buying Bitcoin and so on. And everybody keeps on buying Bitcoin, keeps on buying Bitcoin, keeps on buying Bitcoin. 5 years passes, 6 years passes, 7 years passes, 9 years passes, 10 years passes. And the founder of Bitcoin that has the heaviest wallet drops on the market space. And let's just presume it's not created by a CIA entity that some people may suggest it is. It's not created by NSA or Homeland Security or so on. It was just created, let's just say, by the opposition market space. And they dump it on the market space. What do you think the effects are going to be on the American market space? It's going to be tremendously bad, is what it's going to be. Not only just an American market space, but the world market space. That if this was just one big Levian plan to make the world go towards this asset for the longest time, because you've always got to consider every outcome. You can't just be blindsided inside the market space. You've always got to consider every outcome. So let's just say, you know, it goes on for 5 years. It goes on for a decade. Let's just say it goes on for a decade. And then the founder of Bitcoin decides to dump it. It's going to have very bad implications in the market space. So maybe there's a reason why America has suggested not to buy it for this particular reason for the time being. If Bitcoin was a CIA operation, if it was, for example, that some people may suggest, it's a Homeland Security operation, or so on, or that Satoshi Nakamoto backwards suggests the translation Central Intelligence. For example, if America buys 1 million Bitcoins over a 5-year period, and that happens, and the founder of Bitcoin decides to drop it, and is not an American citizen that created it, it's not a government entity from the US that created it, it's an opposition market space that created it, it was just all one big plan to dump it on the market space, that could have tremendous implications in the market space. But that is just something that Bitcoin maxis just don't want to comprehend for some oddly reason, because they just see it as the freedom token. They see it as the freedom currency. But what people need to also understand is nothing really happens in this world by, you know, accidental. Nothing on a large scale happens by accidental. Everything in this world is pretty much pre-planned to happen, is coordinated to happen. You know, everything in this world. Same goes with the digital market space, where the World Bank was doing testings on blockchain. Same time COVID happened, they needed people to move away from cash. So they came up with the idea, cash carries germs. World Bank does testings on blockchain, successful. COVID happens. Cash carries germs. People move away from cash during COVID. During COVID, they close down banks and ATMs. Everybody comes out of COVID. Less banks around you, less cash points around you. All of a sudden, businesses don't accept essential crypto. Businesses around you don't accept cash anymore. It's almost like during COVID, they were preparing you for this digital world. but they wanted you to stumble up onto it. So everything in this world genuinely happens by, pre-planned scenarios. Nothing happens by coincidence. So what a lot of people need to understand, because everybody likes to get onto every other asset. Everybody inside the crypto space might say, oh, well, XRP is bad because it's created by Ripple, or Ripple is taking advantage of XRP. And Cardano is bad because the founder of Cardano doesn't know what he's doing. This is bad, or that is bad, or this is bad, or that is bad. But we've also got to, consider the fact that the number one asset inside the market space is created by an unknown group or an unknown person. And that nothing really happens by accident in this world. Everything is pre-planned. So that's what the Bitcoin Max is, or anybody else inside the crypto market space has to comprehend. It's all good and jolly regarding the United States market space buying 1 million Bitcoins. Why not? United States buying 1 million Bitcoins is a good thing for the market space. It shows that, the biggest market space in the world is showing confidence towards the biggest asset in the world, the digital asset, number one digital asset. It shows tremendous confidence towards the crypto market space. But also, when it comes to any financial decision, you've got to consider the good and the bad. And the bad being that if that particular asset is created by an opposition party, and the whole big scheme of it was to get the essentially competing market space to purchase a tremendous amount, and a decade passes and they drop it on the market space, it could damage and send ripple effects for that market space. So if America buys 1 million Bitcoins, all jolly and good, but if America buys 1 million Bitcoins in a 5-year period and a decade passes, let's just say a 5-year period ends, and a decade above that passes, and then the founder of Bitcoin, and it turns out it's not the CIA or Homeland Security or whatever, and it just turns out to be a Chinese department, it turns out to be a Singaporean department or a Hong Kong department, and they dump it on the market space. That could send shockwaves throughout the American market space. So this is what the Bitcoin maxis just don't want to comprehend for some reason. That they think is, the grass is always green on the other side. So, this is why I say, because everybody gets onto, oh, well, XRP is bad because of Ripple selling XRP. Cardano's founder is, this, and Solana is this, and AVAX is this, and essentially meme coins. There's so much criticism towards every asset inside the market space. But, God forbid somebody throws a criticism towards Bitcoin. Everybody gets onto your case. But that's the number one asset we should be not throwing criticism towards, but asking them genuine questions of, if things do go sideways, America does buy 1 million tokens of Bitcoin over a 5-year period. Nations around the world start following America's footsteps and buying 1 million, buying Bitcoin alongside America in that 5-year period. America's trying to buy 1 million Bitcoins in that 5-year period. Countries who follow America's footsteps also buy Bitcoin. And then the 5-year period ends and another decade passes. Whoever created that Bitcoin, the entity that created Bitcoin, dumps on the market space, turns out to be opposition market space. It could have just been one big plan to damage one particular market space. That is something you have to consider. You can't just be all, well, we want America to buy 1 million Bitcoins. We want, though people suggesting America to sell its cheese supply to buy Bitcoin. Though people suggesting America to buy, America to sell certain food supplies to buy Bitcoin, which is a ridiculous idea. These are all things that everybody has to consider. They all, and some people just don't want to comprehend that. God forbid somebody throws a criticism towards Bitcoin. It's the end of the world. It's all good and jolly to throw criticism towards XRP, XLM, XDC, HBAR, Solano, AVAX, TON, NEAR, wherever asset there is. But, no one dares to throw criticism towards Bitcoin. I'm not throwing criticism either. I'm not throwing criticism in any sort of a way. I'm just suggesting that if it turns out to be an opposition entity and it's not CIA or Homeland Security or whatever who created it, it turns out to be the Chinese government that created it, Chinese department, or a Hong Kong department or a Singaporean department that created it, that person holds a tremendous amount of Bitcoin, or that group holds a tremendous amount of Bitcoin. If a country like America, the biggest market space in the world, starts buying 1 million, aiming for 1 million Bitcoins in a 5-year period, other nations follow it in suit and start buying Bitcoin alongside America. Those 5-year period comes to an end. America now has 1 million Bitcoins. Bitcoin is sitting at a very high price point because America's been buying for 5 years. Every other nation's been following America's footsteps. Bitcoin's sitting so high right now. And a decade passes, and whoever created Bitcoin, it turns out not to be an American CIA operation. It turns out to be a different operation from a different country. And that particular government decides to dump it on the market space, that tremendous 1.1 million Bitcoin wallet on the market space. That could send ripple effects throughout the American market space and seriously damage it, depending on how high Bitcoin was sitting at. It's just something to consider. It's not essentially any sort of a criticism towards the asset, but it's just something you would have to consider. So that is why America might be hesitant to buy an asset with an unknown founder or an unknown group. It's just something, you have to consider. If it was just one big plan to get the biggest market space in the world to buy it, and after a decade, dump it on the Ross. So it causes a massive, ripple effect in that market space, in America's market space. It was just one big plan. And it turns out it wasn't the CIA that created it. Nothing in this world happens by accident. Everything is very, very pre-planned. Everything on a large scale, very pre-planned. Now, because I just wanted to throw that out there because, I get the concept that, the Bitcoin maxis or even people who are inside the crypto space, they want America to buy 1 million, Bitcoins. And, they're only seeing the happy side, the money side. They're only seeing, if America buys 1 million tokens of Bitcoin, Bitcoin goes up, crypto goes up, everybody's making lots of money. Everybody's buying Lamborghinis, Ferraris, villas, mansions, going on vacations, private jets. That's what everybody from the Bitcoin maxi side or even the crypto side is just imagining. But the bigger picture could be, what happens if things go sideways? What happens if America does buy 1 million Bitcoins over a 5-year period? What happens if nations do follow America's footsteps and buy Bitcoin alongside America? 5-year period ends, it goes into a decade. And after a decade, the founder of Bitcoin, it turns out not to be a government agency from the US, and as an opposition market space, drops it on the US. That could send massive ripple effects throughout the market space. It could damage lives, it could damage corporations, it could damage a lot of things. There are a lot of things to consider. It's not just as easy as let's just buy 1 million Bitcoins. And that, in my point of view, if America wants to buy crypto project, a crypto project, any crypto project, preferably if America wants to buy it, it should be an American crypto project with a known founder, as in they know who created it. Sure, it might not be as decentralized as people may want it to be, but at least they know who created it. At least they know essentially there are certain developers, there's contracts in place, there's licensings in place. At least it's the safe route, it's the safer option. Whenever you want to go towards any asset inside the market space, there's always risk attached to it. Every asset carries risk, but you can lower your risk. And going for an asset that is unknown is risky. But going for an asset that you know the entire background, you know who created it, you know their developers, you know the licenses they have, the contracts they have in place, and so on. That essentially gives you confidence in that particular asset. But an asset where who knows who created it, and the person that created it has a humongous wallet that potentially could drop it on everybody in over a period of a decade if they wanted to. That is a risky asset. So if America did want to buy a certain asset, in my point of view, it should be an American asset. It should be an American company that created that asset, and they should go towards that rather than an asset of who's the founder. And a founder that has a very, very large wallet. Just to put in perspective, BlackRock, Fidelity, 21 shares, ARK Invest, and the Franklin Templeton, and the rest of the American institutions that have Bitcoin ETFs, collectively together, they just about match the amount of Bitcoin the founder of Bitcoin has in his wallet. So BlackRock, Franklin Templeton, 21 Shares, ARK Invest, and so on. These Bitcoin ETFs that the American institutions created with, all these big major players, together, these Bitcoin institutions, Bitcoin ETFs, these American institutions, together with their Bitcoin ETFs, if they put all their wallets together, they just about match the founder of Bitcoin's wallet. Just about. That's how large his wallet is. The founder of Bitcoin. That's how large the wallet is. There are certain things you have to consider. So, I always just keep on seeing the debate or the argument or people creating X spaces and they're talking about it and they're going, oh, America should buy 1 million Bitcoin, because what everybody's just thinking about is, how much money they're going to make if America buys 1 million Bitcoin. The Bitcoin maxis are all they're thinking about is how many Lamborghinis they're going to buy when America buys 1 million Bitcoins. All they're thinking about is how many Lamborghinis and Ferraris and mansions and villas and private jets they're going to buy. And people inside the crypto space are thinking the same thing, because, they're seeing as Bitcoin goes up, they go up. But if regulations come up, we decouple. That's a different scenario. But they're thinking of the same thing. But the bigger picture is, what happens if it's not a CIA operation or a Homeland Security option or an FBI's option or whatever option? Turns out to be an opposition party that created it, a different country that created it, that might dump it on the market space over a decade time when America has 1 million Bitcoins, because that could seriously damage and impact America's market space. And not only America's market space in terms of a government wallet, but American institutions also. And jobs. A lot of jobs will be lost if that has ever happened. So you got to think about the bigger picture. But unfortunately, the Bitcoin maxis and everybody else inside the crypto space, not everybody else, but a lot of people inside the crypto space, all they're thinking about is Ferraris, Lamborghinis, mansions, villas, and private jets. But if you look at the bigger picture and so on, that could end very bad. So this is why I say, if America wants to purchase any digital asset, it's better if America purchases an American asset, because they know which company is behind it. They know which developers are behind it. They know who created it. They know what licensing it has. They know how it operates, and so on. And that makes essentially an American crypto asset a much more safer option, rather than who the hell created that. And why does the person who created it have a very big wallet? It's just, really something to, it's something you have to think about. And it's not just, I'm not saying this to create FUD for the market space or so on, because I don't want to be that person. But it's, you have to have outcomes of how things can play out. It's not just, it can only play out like this. No. If you, as somebody that's inside the market space, you understand you've got to consider multiple outcomes. Always. If you're inside any market space, you consider multiple outcomes. If you consider one outcome and always think that only one outcome can play out, you shouldn't be anywhere near a market space. Always consider multiple outcomes. Hey, Miles, what does everybody think about just what I said right now? That America, in my point of view, should only buy American crypto assets, because they know the founders, they know the company behind it, they know they have licensings, they can operate. What does everybody think about what I just said? Everyone that's watching right now, CMF members that are watching right now, what's everyone's thoughts on what I just said? That America should focus, if they want to buy a digital asset, it should be American companies, in my point of view. So essentially, XRP is an American asset, in other words. HBAR or Cardano, Solano, XLM, there's a lot of American assets out there, but it should be American assets if they want to buy any, because they can control that market space, so it doesn't end bad for the government or the companies in America that are holding those particular assets. Everybody agree? And that, things can go sideways if America does buy 1 million Bitcoins. It's not just happy, jolly days and green grasses are always green on the other side. Let's see where we're all inside the comment section before we do go through the next news on tonight's live. before anybody jumped down my throat, it's not a bear market. It's facts. It's not a bear market. Let's go CMF. Let's go. I like to call this the second bear market. Susie, hello, Miles and family. Susie, good to see you. How you doing? How you been? Shelly, hey, Miles and CMF. Hope you're all doing fantastic. Let's go, LJ. Good to see you. How you doing? That's the thing. It's a real possibility. It cannot be disconnected because we don't know. It's true. Good evening, Miles and CMF. Bit late today, but XRP, good to see you. How you doing? How you been? It's a huge risk. Makes more sense to buy XRP from America. True, and the BTC percentage isn't high in the reserves. XRP is going to be the US biggest crypto asset because Bitcoin is not going to cut it. Let's go, JP. JP, Shelly, and Mav, all on the same page. Bitcoin Emperor with no close. XRP, the designer close manufacturer. Who does business with an unknown? No one. No one. Do you know what it's like? It's like if you went to purchase something and they said you can purchase, you have option A and option B. And they told you option A, you can purchase from this person or this group. We don't know who they are, but this is their price. And then they said option B is this company, they produce this product, and this is how it operates. These are their developers, these are their licensings. If you had a choice, logically, as an investor, which one would you go for? Logically, as an investor, forget about the private jet lifestyle, the Lamborghinis and the villas and the mansions, just for a second. If you are essentially provided with option A and option B as an investor, you walked and sat down at a table, and in front of you on this desk, there was two files. File A, which said essentially the unknown investor, the unknown essentially asset. Option B essentially is the asset that has essentially a background. So option A in the file would say, this asset, we don't know who created it, we don't know where it came from, we don't know if it's a group or a person or a government or an entity, but this is what the asset is. And then file B was, this is what the asset is, these are the people that created it, these are the developers, these are their contracts, these are their licensings. Logically, any investor would say option B. Logically, genuinely, if anybody used common sense, if you were provided with two files, option A and option B, and option B said, this is the founders, this is the creators, this is the developers, this is the licensings of this project, and then option A just says, this is created by we don't know who. A group of people, it could be a person, it could be a government, we don't know who. And the person who created it, or the government that created it, or the people that created it, have a very, very large wallet of it already. Logically, any investor that does essentially works out the risk on their portfolio would suggest option B. But again, not financial advice in any sort of a way at all. And that's probably just how the US might be looking at it. So yeah, perfect. Honestly, what Susie said, who does business with the unknown? No one. BTC is too risky. The unknown is concerning. Definitely America should invest in America. Facts, US. My opinion is very powerful. Man holds BTC, I think will be difficult to buy only America crypto projects. Facts. Especially proven companies and utility mounts. Facts. Let's go, Ian. I'm guessing everyone agrees with me. Now, EU. EU suspends tariffs on US goods for 90 days. So it seems like the EU has come to the conclusion to also stop their tariff battle with the US for 90 days after the US made their own announcements. Now, the announcement did come essentially later on last night, essentially, but we have a little bit of an update on that matter. So the European Commission, led by President Ursula, has temporarily suspended the retaliation tariffs on US goods for 90 days, starting from April 15th, as reported essentially. This move is a part of the ongoing efforts to stabilize the global economy amidst the existing essentially trade tensions between the European Union and the United States. The suspension presents a brief, essentially, respite in essentially escalating trade tensions. Yet concerns linger over the ongoing disputes that have historically impacted sectors like steel and automotives. The temporary halt encourages further negotiations to potentially reach a zero tariff trade agreement with the US. EU President Ursula expressed willingness to negotiate with the United States, highlighting the importance of a clear, predictable conditions for trade. The suspension essentially is seen as an initial step towards easing international trade barriers. Efforts to resolve trade tensions have temporarily removed barriers imposed on 21 billion euros worth of US goods. While the pause is not a permanent solution, it provides short-term relief to various industries and global supply chains. Stock markets reached positively with the S&P 500, essentially did well for itself with the announcement that came out of Europe yesterday and so on. And past trade disagreements, such as those in the 2002 and 2018, saw a brief shift in market trends, but ultimately required ongoing negotiations to address fundamental issues. Historically, the EU and the US trade essentially disputes have included multiple sectors like steel and aluminium, often leading to essentially economic instability. The recent suspension signals possible improvements through the underlying challenging, persistent market space that we're in terms of trade battles. Experts believe continued focus on diversified trading partnerships and robust trade policies will be essential in the long term. Some analysts expect an eventual stabilization in the trade outlook. On the success of the future negotiations, clear, predictable conditions are essential for trade and supply chains to function. President Ursula stated, adding that this pause essentially is an important step in stabilizing the global economy while advocating for a zero tariff agreement with the EU and the US. By the way, this is the same president from the European market space that suggested that they're going to go head to head with the United States in terms of tariffs, and they're not going to back down. And she made a second speech essentially saying that she is backing down and that she is having a zero tariff essentially agreement with Trump. And not only that, but the EU is going to have to start buying more US products, because the EU sells a lot of products to the US, but for some reason they don't want to buy products from the US. And the US sees that as an unfair market space, which is true. If you're providing and selling a lot of products to a certain market space, but you don't want to accept their products to sell in your market space, then that isn't a fair agreement. So it's not just that it's about zero tariffs, but it's also about matching in terms of products going in and out between these two jurisdictions, is what Trump is really aiming for. Trump is aiming for, if the EU sells a certain amount of products to the US, then the US has the right to sell a certain amount of products, and the EU should be purchasing a certain amount of products from the US, and so on, a back and forth type of scenario, which it's fair. It's completely fair. And nobody should be disagreeing to that in any sort of a way. Now, what we're going to talk about next is Trump's comments on a transition, essentially, period in blockchain context. So, US President Trump addressed potential challenges arising during the transition phase, suggesting that outcome would be transformative. His statements has prompted speculation in various sectors about impending, essentially, changes. In a recent statement, President Trump highlighted the challenges anticipated during the ongoing transition. Despite the hurdles, he emphasized that the transformation essentially of potential significance, although direct blockchain implications remain vague, industry observers have started to interpret these remarks as potentially foreshadowing changes within technological and financial ecosystems. The statement comes aimed changing essentially financial landscapes, with market participants kneelingly observing any potential impacts on cryptocurrencies. Despite no direct linkage between Trump's remarks and immediate market shifts, CoinMarketCap notes an increasing attention to blockchain broader implications. Reception to the statement varied, with some essential industry leaders voicing optimism. No direct official responses from involved government bodies or leading blockchain figures have emerged. Public reaction has included a mixed anticipation and skepticism about potential developments, and the transformative potential of blockchain technology will likely influence numerous facets of global financial systems, commented an expert analyst from CoinDesk. CoinDesk and CoinMarketCap came to the conclusion that Trump, when he does speeches, he's throwing hints towards the crypto space. So next time you're watching any of Trump's speeches, look out for some sort of essentially announcements or speeches in any sort of a way that maybe Trump is throwing some sort of hints out there. Now, what we're going to talk about next is regarding the Federal Reserve. The Federal Reserve, Bowman, highlights economic concerns and aimed inflation. So the biggest thing we want from the Federal Reserve is rate cuts ASAP. And Trump wants rate cuts. We want rate cuts. The market space wants rate cuts. The world wants the Federal Reserve to do rate cuts, to be fairly honest. Federal Reserve Governor Michael Bowman addressed economic concerns, highlighting strong U.S. economic conditions and a recent decline in inflation. Bowman cautioned that essentially trade policies could essentially induce market volatility, but refrained from commenting on tariffs in terms of economic impacts. Bowman's comments underscores caution in terms of monetary policies aimed physical uncertainty, scrutinizing potential, essentially long-term repercussions on financial markets, including cryptocurrencies. Federal Reserve Governor, essentially Bowman, expressed concerns over recent fiscal policies during her testimony. She highlighted essentially strong U.S. economic performances and noted last month's decrease in inflation. Bowman carefully essentially stance on tariffs reflects the Federal Reserve's ongoing policy evolution, monitoring to understand their broader economic impacts. We are watching and waiting to see how the path to these policies continues to evolve, and we will understand their economic impact, said Bowman, the Federal Reserve Governor. Bowman's approach to fiscal uncertainty mirrors past Federal Reserve strategies, reflecting historical caution during periods of economic unpredictability. So, apparently the Federal Reserve is stuck in the middle of, are they going to do the rate cut or are they not going to do a rate cut? That's still better than where they were standing before, because where the Federal Reserve was standing before is, we're not going to do rate cuts. And then they came to the conclusion of one rate cut, maybe this year. Now they've come to the conclusion of, maybe we should be doing multiple rate cuts, but we're still, 50-50 on the multiple rate cuts, but at least we got the Federal Reserve to a stage where they're thinking about multiple rate cuts. That's very beneficial for the crypto space and the world market space, to be genuinely honest, and for the American market space, most importantly. Now, U.S. Senate approving essentially Paul Atkins is one of the biggest news out there for the SEC, because now the acting chairman of the SEC can essentially slowly step down, while the actual chairman of the SEC can take his seat. So the biggest announcement that came in today regarding essentially Paul Atkins taking his chair, we're going to talk about essentially just briefly about some of the things that he's going to be achieving while he is now going to become the SEC chairman. The U.S. Senate has officially confirmed Paul Atkins as the SEC chair. This is after his nomination was cleared essentially in a 52-44 Senate vote. The confirmation essentially of a former Wall Street consultant comes after the U.S. President Donald Trump named him to lead the agency back in December of last year. He said, "We welcome Paul Atkins as the next chairman of the SEC, a veteran, our commission. We look forward to him joining with us along our dedicated staff to fulfill our mission on behalf of investing in public," said the Financial Watchdog's commissioners in a statement. Senate Banking Committee Chairman Tim Scott expressed confidence that Atkins would continue the SEC's crypto-friendly approach under essentially, and added that his experience would help roll back Biden's era policies, boost capital formation inside of America, support retail investors in the crypto space, and bring regulatory clarity to digital assets to keep the U.S. market space competitive. Senator Cynthia Luminis voiced similar support, expressing confidence that this leadership would improve rulemaking for the crypto industry. Atkins is set to replace Mark, who has been serving essentially as the acting SEC chairman since January 20th. By the way, Mark has done a very good job, from my point of view, so far. And the registration of Gary Gensler. Since Gary Gensler stepped down in January 2025, Mark has been taking chairmanship of the SEC as the acting chairman of the SEC and has eased his approach to crypto enforcement. The agency agency has closed multiple investigations, including crypto firms, and formed a crypto task force and reversed several previous rules that had imposed restrictions on digital assets. This is why I say Mark, has done a tremendous job as an acting SEC chairman. A lot of people thought Mark couldn't achieve anything as an acting SEC chairman, but he did. Atkins is expected to adopt a more favorable stance on crypto regulations in line with Trump's administration efforts to lower regulatory hurdles and strengthen the domestic and digital asset industry. In a testimony before the Senate Banking Committee last month, the 66-year-old named the creation of digital asset regulatory frameworks as a top priority when he does become the SEC chairman, which he now officially has essentially became the SEC chairman. So his top priority, in his own words, in the past was, fixing the crypto space. It's remaining the same words. He criticized essentially the existing lack of clear guidelines, urging essentially a cause of confusion and suppression when it comes to innovation inside of America. I agree with 100%. The official also essentially committed to working with Congress and the SEC commissioners to build the rules that balance investor protection with innovation inside of America. And the new chair also brings extensive experience in the crypto space. He founded essentially his own company back in 2019, and so in 2009, essentially a law firm whose clients include traditional banks, crypto exchanges, and DeFi platforms. So you could say he has an understanding of what crypto and blockchain is. From 2017 to 2024, he co-led the Token Alliance, which essentially advocated for crypto-friendly policies. He also served as an SEC commissioner from 2002 to 2008. This man is pretty much the perfect person, you could say, for an SEC chairmanship. He should have been the SEC chairman a while ago, briefly before Gary Gensler ever stepped foot into it. Now, moving on essentially from Paul Atkins' announcements that he is sticking true to his words and his number one top priority is the crypto space and is going to create a very fair market space. To Bitwise's CIO. Bitwise's CIO has once again came out with a perspective on the market space. So he said Bitcoin is primed for a historical rally after market turmoil. Bitcoin has weathered one of its most volatile periods in recent months, he said, yet top analysts remain unfazed. According to Matt Hugan, Chief Investment Officer at Bitwise, at the $12 billion asset management Bitwise firm, BTC isn't just surviving, it's preparing for an unprecedented surge. He said Bitcoin bulls should be inspired by its performance, Matt Hugan declared in a recent analysis. He said once this market volatility stabilizes, we're going to see it return to new all-time highs and beyond. His confidence isn't blind optimism, it's rooted in Bitcoin's dramatic evolution since its early days. In his view, the number one cryptocurrency has shed its reputation as a speculative gamble and emerged as a legitimate macro asset so far. Comparing BTC's COVID-era crash when it plunged below $5,000 to today's $80,000 plus price floor, the analyst noted that a critical shift in terms of institutional investors, it's a different asset. It has essentially a broader distribution of institutional ownership, declared Hugan, alleging to its essentially deeper base of holders, including hedge funds, corporations, and even sovereign wealth funds. The Bitwise essentially executive urged that this structural change has made Bitcoin far more resilient, unlike 2020 when essentially panic dominated today's holders seem to be more long-term believers. In terms of, because a lot of ETF, essentially, there's a lot of institutional ETF holders in Bitcoin, not the institutions themselves, but the clients of those institutions hold those Bitcoin ETFs within those firms, and suggesting essentially that they don't sell, which is true. High-profile investors essentially don't tend to sell for a minimum of 5-year period before they essentially even think about selling their assets, unless obviously there's some sort of major event that they need to get rid of their assets. It could be a market crash or whatever. It could be an asset going to zero. The Bitwise executive urged that the structure has made Bitcoin essentially resilient that matter. Previously, the investment experts highlighted that the fading of essentially existential threats, including the fear of exchange collapses, technological failures, and government bans. In his opinion, President Donald Trump's establishment of that Bitcoin reserve eliminated the last significant risk to Bitcoin's long-term viability, which was essentially government bans. The crypto community was quick to react to Matt Hugan's bold forecast. One ex-user posted, Bitcoin's just catching its breath before taking off again. Another was more cautious, citing Trump's unpredictability, especially considering essentially how he has blown hot and cold over his new trade policies, causing wild prices to swing both the traditional and the crypto market spaces. Still, others have mocked essentially Matt Hugin's optimism, with analysts essentially suggesting that this, essentially isn't going to be playing out well for Bitcoin and so on, due to the tariff battles that are going on, and that Bitcoin should have been reacting a lot more better to the news, and it didn't. So that both side of perspective from analyst perspectives, but from his perspective, it's actually done tremendously well. And it does see that, once this tariff battle is over with, the crypto market space is going to go absolutely ballistic. He's not the only one that has that perspective. There's a lot of CEOs and executives from major crypto firms that have the same perspective. Even Larry Fink has the same perspective. I shared an opinion by Larry Fink, essentially suggesting that the alternative market space, which has essentially been the crypto market space, is going to do very well for itself after the scenario of tariffs. Now, what we're going to talk about next, essentially, is regarding the SEC and Ripple. So, the SEC and Ripple have filed a joint motion to pause appeals to pursue their settlement terms. So, the US SEC and Ripple Labs have together filed a motion to hold their appeals, inciting an agreement in principle to resolve their long-term standing case. The motion submitted to the United States Courts of Appeals for the Second Circuit on April 10th seeks to suspend proceedings while the parties finalize their settlement terms pending the SEC's formal approval. According to the filing that was shared essentially by lawyer James Flynn, the agreement would resolve not only the SEC's appeal, but also Ripple's cross-appeal and claims against Ripple's executives, Brad and Chris Lawson. If granted, the motion would pause the appeals process and eliminate the requirement for the parties to submit briefs by previously scheduled April 16th deadline. Per the court's records, the SEC filed this notice appeal on October 3rd, 2024, challenging the district's court's final judgment. Ripple followed essentially with a cross appeal on October 10th, contesting to the portions of that same ruling. The commission filed its opening brief on January 15th, and the court essentially set a deadline for Ripple and its executives to respond. These briefs are suspended pending further court action to the motion to stay. Ripple recently agreed to pay $50 million in civil penalties and withdrew its cross appeal as a part of its broader resolution effort. The proposed settlement is still subject to internal review and formal approval by the Commission. If approved, the parties may seek an indictive ruling from the U.S. District Court for the Southern District of New York, where the case originated from. The motion emphasizes that pausing the appeals between the SEC and Ripple, which they jointly filed on together, would essentially consume judicial and party resources while negotiations are being finalized between the SEC and Ripple themselves. The parties have requested that the Commission file a status report within 60 days of any stay order issued by the court itself. Moreover, the filing states that the delay would prejudice no party and that all parties to the appeal and cross-appeal have consented. The case stems from the December 2022 incident enforcement actions in which the SEC alleged that Ripple sales of XRP was unregistered securities and offerings, and in July 2003, a federal judge ruled that XRP sales to institutions, this XRP to retail, this, and so on, ensuring that months Ripple has secured multiple legal wins while facing ongoing regulatory scrutiny. The company has maintained that its operations comply with current security laws and has called for clear legislative guidance to distinguish digital assets from traditional securities, and the latest filings indicate that both sides are moving towards a final resolution of a multi-year dispute. A court order granted the motion would allow the parties additional time to complete the settlement process and potentially close this case. So Ripple and the SEC came together, filed in that they want to pause and just settle between themselves, which means SEC has to remove the injunction and SEC gets paid $50 million. Both parties get to walk away happy, genuinely happy. But great news on that basis, absolutely great news. Also perfect timing, because this is the year of regulations. As I said, this year essentially is going to be tremendously, the institutional sector of the crypto space is going to do tremendously. But also, regarding what I said, quarter one, quarter two, this case is pretty much done. And on that note of very good news. We have come to the endings of tonight's live. If you're watching this for the first time ever, this was the CMF live show. And the CMF stands for Crypto Miles Family. My name is Miles. And this is episode 297 of the CMF Live. This was episode 297 of the CMF Live, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. You can tune to this live Monday to Friday, 11:25 p.m. GMT time or BST time onwards. And also, if you're watching this for the first time ever, and you're watching this on YouTube, and you subscribe to me, thank you so much for subscribing to me. If you watch this on X for the first time ever, and you followed me during this live, thank you so much as well. And if you liked this live, you commented on this live outside the live, you liked this live, you retweeted this live, thank you so much as well. And if you also essentially, watching this live on YouTube and you liked it, thank you so much. And thanks so much to everyone from the CMF that always likes this live, retweets it, comments, and so on. Honestly, thank you so much to everyone that does that, because it does help to spread this live to a bigger audience, to help a lot more people to have better understanding. And then on tonight's live, we talked about the SEC in terms of their Ripple file, essentially joint mint on coming together to make that agreement happen so they can stop the disputes and so on. And you just come to a settlement decision. We talked about Bitwise's CIO's perspective. We talked about essentially the US Senate in terms of approving Paul Atkins. We talked about the Federal Reserve's Bowman's perspective. We also went and talked about on tonight's live regarding Trump's comments in terms of, is he throwing hints towards the crypto space? We also talked about the EU suspending their goods in terms of the 90-day for the tariff day pause. We talked about Senator Luminous's push for bill to buy 1 million Bitcoins, and I shared my perspective on that matter. We also talked about on tonight's live regarding the revolutionary pilot that's happening between OKX Exchange, Franklin Templeton, Standard Chartered Bank, and a few other firms coming together to create something revolutionary for the crypto space. We also talked about on tonight's live regarding tokenized gold market space, which is doing tremendously well for itself. We talked about Coinbase taking legal action against the FDIC for not providing more documents regarding Operation Choke Point 2.0. We talked about the New York Attorney General, who has essentially urged Congress to pass crypto regulations faster. We talked about essentially the US House approving plans for Trump's tax cuts that could actually play out very well for the crypto space. We talked about the CPI data report on tonight's live as well. We talked about Grayscale on tonight's live as well. We also talked about New Hampshire in terms of their Bitcoin or crypto stockpile reserve and the rumors that's been going around regarding United States and China in terms of the tariff battles. So those were all the topics we discussed in tonight's live. This was episode 297 of the CMF Live. If you watched this for the first time ever, welcome to CMF Live. If you followed me, welcome to the CMF family. CMF members, honestly, thank you so much to every single one of you that choose into this live every single night. Likes, comments, and shares and retweets. Honestly, thank you so much to every single CMF member that tunes in every single night, likes, comments, and retweets. Even if you tune in, thank you so much as well. And let's go to the comment section first before we do leave, just in case. Night Miles and CMF. Pablo, see you tomorrow, same time as usual. See you tomorrow, same time as usual. Thanks so much, Miles. Good night, all. Stormy, see you tomorrow, same time as usual. Thanks, Legend. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual. Good night, Miles, and great live. Many thanks. See you tomorrow. Ian, see you tomorrow, same time as usual. Great live, Miles. Thanks. See you tomorrow. Good night, Miles and CMF. Free forever. See you tomorrow, same time as usual as well. Good night, Miles. All the CMF. Thank you for a great live and news. Let's go. See you tomorrow, same time as usual. JP, thank you so much for your help and sharing your crystal ball with us. Good night. Let's go, Mike. Mike, see you tomorrow, brother. Same time as usual as well. I'll be seeing everybody tomorrow, same timing as usual, 11:25 p.m. UK time, United Kingdom time, for episode 298 tomorrow. See everybody tomorrow. Everybody have a great day or a good night, depending on where you're around the world. If you followed me and subscribed to me, thank you so much. And thanks so much to everyone who tunes in every single night from the CMF. Likes, comment, share, and retweet. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See you tomorrow. Leader, thank you a bunch, Miles, and have a lovely weekend and good night all. See you.